Dalmia, and if you look at the markets right now, holding on to good strong gains. Coming in for the benchmark indices, you have Nifty that has comfortably surpassed that 24,600 mark for the first time ever. A short while ago, you had the broader markets that scaled fresh record high levels. And talking about broader markets, is primarily the mid-cap index that scaled a fresh new record high levels. You have Nifty Bank lending support to the markets as well. But talking about the banking spaces, the PSU Bank Index that's actually taken the leadership spot in today's trading session because it is the top sectoral gainer in excess of about 3% move coming in for the PSU Bank Index. But one of the major indices that was seeing a strong move at open, that was the IT index that's totally caved in. If you look at the IT index, it's given up in excess of about 1.6% from the day's highest point as we speak. A lot of the stocks are actually moving in trade today on back of news. Let's take a look at what exactly that oil and gas space is doing at this point in time. You have the oil and gas space that's actually reacting to an ET Now exclusive news break that we had put out a short while ago, that the government has initiated process to bring in natural gas and the ATF under GST. So on back of that, you also have the aviation counters that are seeing good move, be it Indigo, be it SpiceJet, holding on to strong gains in trade today. Apart from that, take a look at the tire stocks. They are all rallying in trade today. A lot of them have actually noticed a price volume breakout as well in today's trading session on back of the fact that there is an expectation of high replacement demand, as well as you have the international rubber prices that have been down from 11% from March highs, and also rubber prices have actually 20 to 40% cost for the tires. So take a look at those tire counters, keep them on your radar. Also, you have VIP Industries, Safari Industries reacting to that initiation coming in from Investec. But Nikunj, let's talk about the markets. We've been talking about the fact that in about a week now, you will also have the union budget. So it looks like the narrative will change in that particular point. Markets are hitting fresh record high levels. Do you think that that momentum will sustain going ahead?
So you have to look at the US markets also. A large part of the gains in India, I think also the fact that while we are talking about 25,000 on the Nifty is 400 points away, it's 40,000, which is a real number on the Dow. And 40,000 on the Dow, I think, is again a magical number. So large part of the strength is global in nature. Within that, we are actually simply benefiting with what the global environment is. Now, yes, the budget is important. Yes, the budget is crucial this time around, whether we like it or we don't like it. This time around, budget expectation decently high because the first budget of Modi 3.0 and the first budget of new government obviously will have its own set of expectations. So unlike the interim budget where everybody knew that nothing would be there, this time around the whole narrative on the tax cut or a tax increase, tax increase on equities, tax cut on personal tax, all that has started. So expectations, I think, are reasonably high. Then you got the earnings matrix, which is right in the middle of the budget, and a little bit of here or there surely will have an impact on the market per se. The good bit here is that flows are relentless. The good bit here is that every decline has been gobbled up by day traders or by the FOMO crowd. So in terms of the appetite is there. In terms of direction, the direction is strong. But in terms of expectations, can we really have a clean month in the clean move in the month of July like we saw in the month of June, despite the fact that there was a bit of a setback on the election day? The answer to that, well, may be a no. That I think we are in for a choppy month rather than a clean month now.
All right, choppy month rather than a clean month coming in for the markets is a view coming in from Nikunj Dalmia. But let's take a look at the markets in depth, understand from our charters where they see this headed going ahead. We also have Hemant Shah who's joining us. Hemant Shah is a fund manager at Seven Island PMS, as well as along with him we have Kunal Bothra as well as Naresh Mirani joining us on the show. Good afternoon, gentlemen. And Kunal, let me come first to you. And let's talk about in particular what exactly is happening in the IT index. This one from among the top gainer on today's trading session has actually caved in, down about 1.5% from the day's highest point. What exactly is happening in that sector? Do you think that the top was already made for it on Friday when all of them were rallying post TCS's numbers?
Not really. I would believe that this is just mild profit booking because the IT index today opened with at a lifetime high for itself at 39,450 mark, which is the previous highs. Approximately, we managed to cross over those levels, and after this kind of a steep rally, I think, and especially the news flow for a couple of large cap IT names, it's bound to be that these stocks would get into a bout of consolidation. But I would believe that if these stocks dip back by another couple of percentage points, say on an average, I think that could probably trigger a very good contra entry point again for many of these IT names, because what you're seeing now is a structural change. And when a stock or an index, and we are talking of one of the more formidable indices for our markets. When that makes a fresh high after 3-4 years of consolidation correction, then I think we are looking at a major revival over here. So I think it depends now on one's outlook. Someone who's riding the rally over the last 3-4 weeks and is sitting on 20-25% profits on many large cap IT names, I think they could be ones which could probably try and book some profits out. But for someone who's looking out for a time frame of 6 months, 1 year plus, I think this could just be the start.
All right, this could just be a start is what Kunal is of the view, and just a mild bit of profit taking is what we are witnessing in the IT index. Naresh, let's talk about the PSU banking index then with you, given the fact that a sharp gain, 3% up move, some of them also reacting to some numbers that have actually come in trade today. Where do you see this space? Do you think now it is a PSU bank index versus private bank once again?
So if you look at the recent moves which happened in recovery in a HDFC bank or a Reliance or a Kotak bank, we've not seen a similar recovery happen in the PSU bank segment. So today is the first day we've started seeing a recovery, but yet we are not yet closer to an all-time high back on the PSU bank index. So if you look at the PSU bank index, we were at 8,000 plus levels on the exit poll day. We are still far away from that. Even the names which are the most talked about, a Kotak a Bank of Baroda, as well as a Punjab National Bank or a Canara Bank, they've all been away from the all-time high. So they still have a lot of catch-up to do. So if you look at a Canara Bank, the stock made a top around 128, 130 on exit poll day. We are still not there. So the view is there could be a catch-up trade in all the PSU banks. Even State Bank of India is still away from the highs made of around 900 plus. So I would expect all these names to slowly go and make a new high. So positive on PNB, CanBank, BOB and SBI.
Okay. Kunal, how real is this rally in PSU banks?
I think I'll probably wait for one more day, Nikunj, because in the last 1 month of this correction for PSU banks, there have been these kind of starts. But then what they lack is a strong follow through. The best part about the PSU banking rally today is SBI has managed to come out of a resistance. So I think that 870, 860 mark, where the stock was hanging around over the last 1 to 2 weeks, even though it was more relatively stronger as compared to the other mid cap, large cap peers from the banking pack. But I think that's made a comeback. So maybe the leadership is coming back to SBI. But ideally in this kind of a scenario, it's always best to wait out for one more day because then we could be looking at a 5% to 10% further swing upside for many of the PSU banking stocks. So I'm okay to let go of another couple of percentage points. But in the next 1 or 2 days, we should see a follow-through up move. Only then a buy should be initiated.
Every time we've seen Hemant Shah, market that private banks are getting ready for a comeback, IT is getting ready for a comeback, that has run into resistance. For example, good move in IT on Friday, today no follow-up buying. Couple of days of good gains in HDFC Bank, no follow-up buying. Why is this happening? Why is the private end of the market, which is loved by institutional investors, is not coming back?
Hi, thank you for having me on the show, Nikunj. So basically the bump up what we saw for the IT was the results of the TCS and the commentary by them, basically. And the underperformance of the IT sector till yesterday. Now the gap of the underperformance is getting negated. So yesterday was the IT, today is the PSU banks. Basically, the triggers are the numbers, the results, and the guidance going forward by the management. And the US, as you rightly pointed out, is going to be the key role to determine the future of the IT sector. And it is widely owned. See, it is widely owned by institutions, right? So since, as you rightly said, the follow-up is not there because it is quite widely owned. And the event is of one result and the trigger for the industry on the basis of just TCS results, I think is that it has taken the whole IT sector by a little bit surprise and hence the euphoria of buying for a day. I think just a trading interest rather than any institutional interest as of today.
View coming in on the IT index, but yes, just a week more and we will be heading to the big event, that's the union budget, the real union budget, given the fact that this will be first one under Modi 3.0. And let's bring on board my colleagues Prakash Priyadarshi as well as Anurag Shah, who have been tracking the exclusive stories around the budget. So all eyes on what the center talks about the PSU divestment strategy. And Prakash, you're here, you've been covering the story. The that the government is unlikely to set a divestment target in the upcoming budget. What exactly are your sources telling you on this regard?
Yes, we are learning from our sources that the government is unlikely to set any specific disinvestment target in the forthcoming union budget. Sources are informing that the disinvestment transactions will be taken forward based on the market conditions. In fact, the government will adopt a calibrated disinvestment strategy going forward, and the focus will be on the capital formation and value generation in the PSUs. Sources are informing that the government is elated by the increased dividend collection from the PSUs. Therefore, there is a change in policy which is visible on the ground, and the focus are being given on the value generation in the PSUs. As you are aware that the government did not mention a specific disinvestment target in the interim budget. In fact, it has set a target of rupees 50,000 crore from disinvestment and asset monetization put together for the financial year 2025. And a similar kind of approach is likely to be adopted in the forthcoming union budget, which is full-fledged budget as well. However, sources are also informing that the ongoing disinvestment transactions will be taken forward, and the government would like to complete some of them during current financial year.
All right. Now, why is this important? Well, the reason why this is important is that this also means that government is not looking at putting a fixed number on disinvestment. The story around disinvestment, frankly, with the exception of 1 or 2 years, has not been great, and that includes government OFS. Hardly any stake sale has happened. Strategic stake sale has happened. BPCL did not see light of the day. IDBI Bank has been put on the bank burner. Container, yes, no, it's moved to Container Corporation, has moved to I don't know. So nothing's happened on this investment front. In order to meet the disinvestment numbers, then there is always this mad scramble towards the year end where dumping happens in PSU stocks. Then markets always fear that, okay, if stocks are high, there would be an inconsistent and a constant supply in terms of government paper. Now, if government is assuming that there would be no disinvestment target, there is no compulsion, then the physical maths will have no hidden, numbers, no compulsion. And the fear for some of the PSU that government is going to be looking at selling stake, I think may not be there. Having said that, if something happens, government will raise money. I mean, there's an easy way that you want to raise money when defense stocks and railway stocks are at an all-time high. But one is need-based, second is compulsive. The compulsive nature in this case, I guess, is something which could be taken a hit back if the numbers do not tally up in terms of the union budget. Look, there's a deadline in which you have to meet your financial numbers. And then budget exercise becomes, then the budget maths becomes a compulsion. And we've seen that happen when HPCL was merged with the ONGC, PFC, RFC merger, a lot of government OFS, Suti stake, which has happened in a lot of companies. All that has happened periodically, which may make the market nervous. And if there's no target on that front, then that will just make markets assured that there is going to be no pent-up supply or inconsistent paper supply from the government, at least on that front.
Right, so that's about the divestment trend, given the fact that we have to wait and watch out for what's this time around. What sources have told Prakash is pretty critical. The fact that the government is unlikely to set targets for divestment in the upcoming budget. But that's about the divestment, the PSU counters. But what we are also learning from our sources that the upcoming budget may give a big boost to the insurance sector. My colleague Anurag Shah is here to tell us about what sources are telling him with regards to the fact that what are the major announcements or the reforms that they are likely to consider for the insurance space. Anurag, over to you.
So a lot of announcements are expected in union budget related to insurance sector, and most important one is related to reforms in insurance industry, which is related to Insurance Act amendment. So as per our sources, in budget speech, FM is likely to give mention about the Insurance Act amendment at the earliest. This will be a big reform in insurance sector, because we have seen that draft bill of insurance Act has suggested about the composite license, reducing the minimum capital requirement for new insurance company, flexibility in solvency ratios as per the business of company, and value-added services can be provided by insurance companies. So after the Insurance Act amendment, insurance companies will be able to offer many services under the composite license, like a single insurance company will be able to offer general insurance, health insurance, motor insurance, property insurance, life insurance. In last press conference of quarterly result, LIC chairman has also mentioned that after the new government formation, a composite license would be reality, and LIC would wish to venture into health insurance. Presently, LIC is selling only fixed benefit services, but after the getting the composite license, they will be able to offer indemnity health product also, because they already have a 14 lakh agents, and as being the biggest insurer of the country, they will be able to capture the health insurance market also. That announcement is likely to get a mention in budget speech. Other than that, we will see that scope and coverage of Ayushman Bharat health insurance scheme, which is the flagship scheme, health insurance scheme of Government of India, which provide insurance coverage of 5 lakh to 50 crore BPL. So that also is likely to get increase in scope, because it was mentioned in BJP's manifesto that all the senior citizens above the 70 years of age will get a free health insurance coverage of 5 lakh. So in that regard also, the overall outlay will increase for Ayushman Bharat scheme, which is presently around 7,500 crore, so which will cross the 10,000 crore mark also. So overall, insurance company will also get the money in form of premium. And another one is related to the launch of National Health Claim Exchange. So for framework of National Health Claim Exchange has is completed, and it will be a game changer in the health insurance space. So that launch also likely to get a mention in budget speech. So, couple of announcements expected in budget related to insurance industry, and most important one is the Insurance Act amendment, which will pave the way for composite license for insurance industry.
Thank you so much for that, Anurag, and very crucial developments hopefully we will likely see in the insurance sector. And Nikunj, what Anurag was saying, the Insurance Act, the fact that they may announce a provision for composite licensing. Talking about the insurance space as a whole, let it be health insurance or life insurance, when in 2020 everyone thought that this particular industry would get a flip, isn't it? We will have more emphasis on health, on life, but that hasn't transpired when you see the stock price performance of these companies. But the fact that the finance minister may announce a provision for composite licensing, what would this mean exactly for the insurance space according to you?
See, the insurance sector has gone through two things. One fundamental change, which is post-COVID, they had to take one-time cost in terms of cost, and their entire underwriting cost had gone higher. Then came the whole change in terms of where government does not want or did knocked off all the basic tax exemptions, which was one of the USPs of selling life insurance. So that also has gone away. Now this sector has also seen what could be called as a formidable churn in terms of private sector gaining, public sector losing. When the mandate was done, the mandate was that LIC would do a life insurance, others would do general insurance. LIC cannot sell health insurance. Now, if there is a composite license, which is that you can do it all, then that technically means that the LIC can move into what could be called as life plus health. Life plus health is always a very deadly combination for a company of LIC. Imagine if you're going to the same customer, or in this case insurance buyer, where you're able to price health along with life and vice versa. So this, I think, for LIC and the others would be a game changer more for LIC. That's what I understand. And this is something which is overdue, I think, largely because of what the election cycle we were in. This did not see a, I mean, Anurag's been talking about it from last 6 months now, but we understand that largely because of election compulsion, the decision was not done. But looks like a decision on this really would be done. This definitely will have impact on SBI Life. This definitely will have an impact on Star, especially companies which are big in the case of health insurance.
All right, so let's cleanly watch out for that particular space. And if you see LIC's performance has been a marked outperformer amongst the rest of the peers, at least for in the last 52 weeks or so. But on that note, we slip into a break on this edition of Closing Trades. When we come back, we'll talk more about stocks and stocks that are making news. Don't go anywhere. Welcome back, and let's talk about our exclusive chat of the day. We caught up with Quant MF's Sandeep Tandon, and we spoke about a lot of issues. We spoke about the global equities, the Indian market, sector churn, and also remember that he remains constructive on the market as a whole as an asset class. Here are what are his views on various sectors as well as markets.
we remain very constructive on the buy thing. I think 24,000 is a more of a psychological number. Whether it's 25 or 27 doesn't matter, but directional is up for India. So we remain very constructive for India as equity and asset class. And if you really look at, people have been very, very skeptical for last 1 year. Okay, I have been hearing this noise. Okay, the valuations are expensive, which is no doubt about it. But when you have to look at valuation in isolation, you don't get answer. That's why we always talk about how liquidity is rising. Okay, if I have to talk about money flow towards global equity is at the significantly high levels. It's still increasing. Okay, if I have to look at in quarter on quarter, year on, that's actually rising. Risk appetite is equally constructive for India. Risk appetite, surprising, is still very constructive. It's actually inching up, where global risk appetite have slipped a bit. So India and certain emerging market risk appetite is still rising. That's the reason we remain equally constructive, and I have seen that people have been very skeptical about Indian market, even not only the family office, even the FIs, which has been. Look at some of the sector, like recent example was the technology, it reached that under ownership. People have given up. Virtually all the analysts at the bottom of the cycle got capitulated. Maximum downgrade came at the bottom of the cycle. Now 30, 40, 50% stocks have rallied. Now you have seen the reverse happening. The upgrades have started pouring. So I think we as a house really believe in capturing these inflection points when people give up completely. You have seen a capitulative move. That's the time we build very sizable positions. And so is the case with true on the other side. When you see euphoria happening in certain pockets or certain sectors or certain stocks, we do take a contrarian call and try to book profit. So ultimately, it's a game about if you're able to book at the right time and liquidity is on the higher side. So liquidity is always high on the either the higher levels of the market, or liquidity is high at the bottom of the cycle. So if you can capitalize the upside cycle and by booking profit, then I think it works well. And this is what thesis over dynamic style of money management. You always talk about sector rotation, stock rotation. And we have been early in majority of the large names, which are some of the railway stock have performed very well. PSU has performed very well. Large infra call has done. We are very early talked about consumption thesis in January 2024. We launched a consumption fund. And we were 6 months early in terms of taking a call that something has changed. And we talked about in our presentation that rural economy is the cusp of inflection point. They're about to recoveries, early signs of recovery. High frequency data was showing early signs of recovery. And we took a very large bet on the consumption names. And look at our portfolio skew toward consumption, our FMCG in particular. It played out. So I think that is the strength of predictive analytics when we talk about, and that really help us in generating the superior alpha, which we have generated over 1 year, 3 years, 5 years sort of period. I think we remain very constructive about India as an equity asset class.
Hemant, is there merit in going back to consumption names? Monsoon has been great. These stocks have been neglected. Everybody knows these are great businesses, but growth was not there. So other stocks started coming back. Is it time to look at the other side of the fence now?
Absolutely. I think this is the right time. In fact, the stocks, have underperformed with respect to the stock appreciation, but they have been doing well. In fact, even in the bad times, all the FMCG companies have delivered the numbers. And since the monsoon is good, I'm sure, I think it'll definitely help them to grow their business to much scalable this thing, because the underlying of the business strength is amazing. They just have to capitalize on the growth, and I think they're ready for it. I'm sure the future for FMCG stocks are definitely for a brighter future in the next at least 1.5 years for sure.
Brighter future for the FMCG sector. Yeah. What about then in the consumption space when you talk, Hemant? Also, you have the auto sector that you need to watch out for, right? Last week, that entire sector has been in news for various reasons. You've also had the fact that there could be some policy changes in various states. Then you had news about companies going ahead and cutting prices, some of them offering discounts. What's your outlook on the auto sector? Are you witnessing some sort of a slowdown creeping in, or is it just a blip that's come in given the fact of the May and June sales not being up to the mark?
So as you rightly said, all the companies are offering hefty discounts. And that is what the reason is for the inventory pile-up. But let's divide the auto in two parts. One is for tractor, CV and PV actually, okay? So PV, passenger vehicle market, is definitely having some inventory backup and pile-up. That's where the discounts are going on. I think the CV and the tractor segments have not done well in last 2 years, which are going to be compensated with respect to the auto basket per se. I think tractor and CV will do definitely well. PV is just a short-term phenomena, I guess. I mean, after July, August, I'm sure the sales will start to stabilize first and pick up. But with respect to auto, the export demand is definitely going to drive growth for all these companies, including the ancillaries. So I am quite positive on tractor and CV sector per se for the time.
Positive on the tractor and the CV space when it comes to the auto sector. And also you're expecting that the PV sales should start improvement come post-August or so. But thank you so much, Hemant, for joining us in the show, giving us your view on the various sectors and where you see preference lying right now. But let's come back to Kunal and Naresh and get your closing trade picks. Kunal?
So SBI is something which would be bullish on the stock, coming back above that 870 mark as a breakout level. So keeping 870 as a trading stop loss, I think traders could look at a buy.
All right, so that's an SBI coming in for Kunal and Naresh. What's it for you? PSU pack for you as well?
Again, so PSU Bank, PNB, the stock has been sideways for the last 4-5 months. Made a top around 135, 140 odd levels. And now on the lower end, back in March, April, it made a bottom around 115.80. We went to almost 105, 110 on the election day. And now making a recovery today. So looks like the reversal is in place and we could slowly and steadily go towards the 135, 140 mark.
So it looks like it is the PSU banking space that is looking exciting for both of our charters. But on that note, we'll slip into a break. When we come back, we will take you through the last half hour of trading session and which are the stocks making news. Don't go anywhere. Welcome back. You're watching Closing Trades on ET now, and let's take a look at what US futures are doing at this point in time, because they are near the day's highest point, be it Dow, Nasdaq, or also S&P 500 futures. All of them are seeing good up move. But remember that over the weekend, we saw a news, the fact that there was an assassination attempt on Donald Trump, who is a US presidential candidate, and also he is an ex-US president as well. So a critical development on that particular front, but there are some of the counters that are actually reacting also positively to that. One of them would be Tesla as well. If you see in the pre-market trading session, Tesla has seen good up move above 5%. You have Trump Media and Technology Group, which is majority owned by Trump. That's seen an up move of about 63.2%. This is right now pre-market rates coming in from the US markets. So that's the way how the markets are looking like, at least in the United States. Back home, we've hit a fresh record high level for the mid-cap index as well as the Nifty index as well. And Ansh is here to take us through the volume buzzers of the day. Then Ansh.
Right, so Aurobindo Pharma will be the first stock in focus, as the stock has given a breakout from its 4-session consolidation pattern. In addition to that, the stock has also touched all-time high level. Also, today's breakout was backed by heavy volume of over 4 times its average trading volume of last 10 sessions. Apart from this, Telecom Lab will also be in focus, as this stock has also given a breakout from its 4-session consolidation pattern with volume of over 3 times its average trading volume of last 10 sessions. SBI Life is also in focus, as the stock has surpassed about its key pivot high of around a 1570 level, touching all-time high level with good volumes of around 2 times its average volume of last 10 sessions. Apart from this breakout stocks, there are some chances of Hindustan Copper getting into ban list tomorrow. So keep an eye on these stocks.
Kunal, what's happened with insurance is that they've stopped falling. And base has happened in the last 2 or 3 years. Could this be the comeback sector for the second half of this year?
Yes, and
I get a feeling. I really get a feeling.
Even
जो भी खराब होना था हो गया.
Exactly, and the leadership is coming back. The stocks are making breakouts. We've seen SBI Life coming to a major high. I think 1600 is crossed for SBI Life. ICICI Pru, HDFC Life, these stocks are making a comeback. The PSU end, the likes of GIC, New India Assurance, these stocks are at a multi-month high. So when you look at this in the entirety over the last 1 to 2 months, I think there are some great patterns which are emerging. And I think on the back of this, there's a very strong possibility that this could be a strong sector move and not be a short-lived trending up move, because these stocks have surpassed the initial phases of test of trend, and now these stocks are coming back to breakouts on the monthly and the quarterly charts, which should augur very well for these stocks over the next couple of years and more.
All right, we also have now Pramod Amte, who's head of institutional equities research at Incred Capital, joining us on the show. A very good afternoon to you, Pramod. Thank you so much for joining us on ET Now. And we've been talking about what exactly is happening in the PSU banking space, or be it the FMCG space, actually at this point in time. But what's your take on the markets in run up to the budget? Because we've seen most of these counters or sectors actually be a buzz in anticipation of what is likely expected in the budget. What's your view?
So in terms of budget expectations, clearly what we are looking forward is some amount of relief to come through for the middle class, and also looking at the elections ahead, a relief for rural segment or the rural markets, either in the form of looking at some direction for MSP, or to that extent relief on exports of agri commodities. So that should also give us some hints about sustaining the rural recovery, which has seen initial signs of turnaround in the March and June quarter. So those are the factors which you would look forward to in the budgets for running up to for the budget expectations.
Pramod, are markets prepared for a change in long-term taxes? If that happens, what could be the immediate downside?
So I think there have been some talks about coming through, but looking at the buoyancy in the tax collections, it looks like a difficult one, because the contribution has been a very constructive manner for the government. I doubt there will be any major changes, except for the saying that there has been challenges for FD mobilization, which may need a tinkering, but may not be a drastic change in taxes. But if there are any of those things which you are talking about, then there can be a negative repercussions for the market.
Right. Pramod, I want to just get your view on the manufacturing space actually as a whole. Today you had a headline that said that Apple's India sales have seen an up move of about 33%. It's hit a record of about $8 billion. The manufacturing in India has actually gotten a flip. You also have a lot of PLI schemes also that have actually aided the performance for a lot of these manufacturing companies. Do you see further impetus for all of these companies, and how is the sector looking to you?
So definitely manufacturing as a sector, along with the other sub-segments, including chemicals and all, seems to be coming back. And with the budget supposed to be giving a medium-term view for 5 years, we expect some more positive momentum on the expansion of the PLI, considering that we have seen some initial success in the mobile phone and also in the semiconductor space. And the electronic exports, there is a higher probability that either they will be eased out or will be expanded to add up more industries, or to that extent more companies to participate in this overall scheme of things, as the stability of the new government seems to be a new attractions for the medium-term capex to come through. So I think this theme will remain as the government initiative is to expand the manufacturing contribution to the GDP and also for the job creation to come through. So I think broadly, I think it should fall in place as we go forward and attract the private capex in the segment.
What is happening to Zomato? Just think about it. For a stock which was, the low was 35 or 40 rupees. Let's go back to, jogging my memory here, bear with me. July 2021. Let's look at it. July 2022. July 2020. 21 got listed in December actually. 22, 35 rupees. Almost like an 8x.
Yeah, 40.6 was the low.
It was 37, 38 rupees, I remember. I remember. Then they came out and they said, look, we have...
The blink.
No. That time they came out and they said that we will be profitable. Our path to... See, it came public, 75 went to 150. In their prospectus, they said that we don't know when we will be profitable. Then they come out and said in the second quarter, their loss expanded. Then after that, they did blink it. And then the loss expanded further. And then they said, look, we will work towards getting profitable eventually. And that became the turning point. I think it was July 22. I'm pretty sure of that. July 22.
Correct.
Yeah, I'm pretty sure of 22nd or 23rd July. I'm just jogging my memory here right now. Okay. Well, Zomato has once again increased its platform fee, taking it to 6 rupees per order now. July 2022, well, you were getting a discount when you're ordering something and you were getting no delivery fee. So imagine if you're ordering a milkshake on Zomato, 3 years ago, you're getting a chocolate bar free with that. Now, not only you have to pay for the milkshake, the full price, you have to pay additional for the delivery, and that free chocolate bar is on, which means that they've understood that you need to be profitable. And the fact that they've increased the platform fee from 3 rupees to 6 rupees, the profitability at the aggregate margin because of operating leverage has kicked in. Sumit's got details as to why and how.
Well, it's yet another hike on the platform fee that Zomato and Swiggy, both of them have taken. Now, Zomato is the listed one, so we'll talk about that. Now, they have hiked the platform fee from 5 rupees earlier to 6 rupees. Now, they have been continuously within a gap of within every few months, they have been increasing this platform fee by 1 rupee. And if you see nearly in the last 1 year, the platform fee has increased from 2 rupees to 6 rupees. They had started charging the platform fees in August 2023 by 2 rupees. And in October they increased it by to 3 rupees. In January they increased it to 4 rupees. In April they had increased it to 5 rupees, and now they have increased it to 6 rupees. So less than 1 year they have increased the platform fee by nearly 3x. Swiggy had introduced platform fee back in April 2023, and they are also now charging a 6 rupees platform fee on every order. So platform fee is a flat fee charged by both Zomato and Swiggy on per order, irrespective of the order amount, and this fee is charged to both members and non-members of Zomato and Swiggy. Now, what will be the impact of the same on Zomato's financial? Now, as per analyst, every 1 rupee hike in the platform fee increases the food delivery business's contribution margin by around 0.2 percentage points. And if you see, as of FY24, Q4 FY24, the company had a contribution margin of close to 7.5%. So definitely this will increase. And on an absolute basis, if you see, the company does around 19 crore orders on a quarterly basis, which the number is what the company has been clocking for the past few quarters. So on an annual basis, this hike could definitely increase their EBITDA by around 80 odd crore rupees, which is nearly 6 to 7 odd % of their EBITDA amount. So that's the kind of financial impact or financial bump up that we can see on the back of this 1 rupee hike done by Zomato on the platform fee.
We can do, as you can see, the stock price today is at a fresh record high levels. That's the matter for you. But what's the dealing room buzz? My colleague Sharad is here to tell us all about that. Sharad, over to you.
Well, yes, in focus is Phoenix Mills, and the dealer buzz is that FI selling is happening across a counter, and it's likely that absorption is coming in from a domestic institute. Roughly 1 lakh shares have exchanged hands in the day's trade, and interestingly, the FIs hold roughly 33% stake in the company. The key FIs holding their stake in the company include the likes such as Government of Singapore and Nomura as well. Now, interestingly, the stock is up 138% over the last 1 year. Now, the key triggers, if you look at it, is the Q1 operational update has been very healthy. The retailer sales is up 25% on a year-on-year basis. And interestingly, the company has launched new malls, and that is why their trading occupancy and the numbers are expected to be heavy in the first quarter. Also, recently they acquired a 6.6 acre land in Whitefield, Bangalore, which is adjacent to its existing mall as well. So Street will be looking at for the commentary as well on its expansion in the southern markets.
Pramod, what is the right way of looking at fintech and consumer tech companies, Zomato, Paytm, Nykaa? It's been a hot and a cold season, right? I mean, it was a dream listing for Nykaa, it's bottom of the barrel. It was a crazy listing for Paytm, which is yet to recover. It was a big fall for Zomato, it is scaling new highs. Not everything is looking good, not everything is looking bad.
I think a few of them have been quick learners from the private markets to the public markets. So there is a difference in the way the investors look at it, right? So in case of public markets, we would definitely look at the pricing power, as you rightly said, doubling up in the last 6 months. The charges is what the public markets like. Whereas in case of the private markets, it's the repeated fundraising to fund the losses at the closed circle fundraising, which I think from the promoter point of view, it takes a substantial 360-degree turn to adjust to the investor mentality. Or some of them have been faster to learn. So we have seen that in case of Zomato hitting those bottoms and learning quick way, whereas others will follow suit as we go forward. But some of these businesses are great to be in. They have a substantial moat on a medium-term basis, but the right valuation and the right turning points is what to be looked at.
What do we have? Source-based stories, Sunil Mittal, Akash Ambani, N. Chandra, KM Birla. They are likely to attend a meeting with the Telecom Minister, Mr. Sindhya, tomorrow. Pramod, this is again one sector, Telecom, where unimaginable things have happened, right? First the price cut and now the price uptick. Is there more operating leverage left in this entire sector, whether it is Bharti or Vodafone? And then the minute I said Telecom, ghanti bajne lag gayi phone ki. What a coincidence.
I think if you look at even from the point of view of the earnings expectations, clearly I think telecom is the one with the pricing discipline which the sector has shown in the recent quarters seems to be driving the profit growth for the, even though there are very limited players, definitely come through. So in that context, it is a big utility sector where I think capital is getting allocated, and definitely the pricing power is appreciated by the markets and the earnings trajectory is in their favor. And that is what is giving a thumbs up for the sector.
That's a take coming in on telecom sector. Before I come to you, Kunal, on your BTST ideas, what's your take coming in on the telecom space, primarily Vodafone Idea? And that one has seen a good recovery. People are now actually putting their faith in this counter.
Well, so the stock is trying to make a comeback for itself, Shell, but the major resistance point for Vodafone Idea is around the 18.5 to 19 odd mark. And this is almost a third retest of the resistance for the stock in the last 12 months, 12 to 14 months. And the stock had tried to make a comeback. Volumes initially were low, then the volumes started to move up higher, and this time around the third attempt, the volumes were one of the better volumes for Vodafone Idea. But then the stock is unable to surpass those levels with a lot of gusto, even after such kind of a strong participation or incrementally strong participation of volume. So the only concern now in terms of a chart is let the stock sustain about this 18.5 odd mark, or in terms of a breakout. Even if it spends another couple of months higher than those breakout levels, then we can ascertain that the stock could get into a turnaround mode.
All right, so that's the talk about Vodafone Idea, and let's take your BTST ideas then. Naresh, I'll come first to you. What are your BTST ideas for our viewers today?
So first would be a buy on PNB. The stock is reversing from that 118, 120 support levels. Stop loss to be placed at 120, target price of 126. Second is a buy on SBI Life, a new all-time high here. Clearly a leader in the insurance pack, expecting it to continue. Stop loss at 1600, target price of 1660.
And Kunal, what about you?
So I'll go with the buy on Castrol. That's a chart which is looking attractive, especially confirming a breakout above bullish flag formation in the chart. So targets of 288. Stop loss could be kept at 252, trailing it higher since stock has moved up already. And the second would be a buy on SBI Life, the stock confirming a multi-year breakout, multi-month breakout over the 1600 mark. So targets of 1675, stop loss at 1575.
All right, so those are the BTST ideas coming in from our charters. But Pramod, let me come to you and let me get your view coming in the auto ancillary space. How is that particular sector looking to you right now? Pretty charged up, at least the tire stocks are pretty charged up in trade today. Do you think that they will see a good ride or momentum going ahead? No doubt, we've seen some sort of a blip coming in the auto sales number, but will that have an impact on the overall auto ancillary space?
So I think clearly the today tire was more of a relief on the pricing front, as the cost was going through the roof for natural rubber. And they were, except for the leader MRF, which was holding back the pricing. So that falling in place, there is more confidence that the price hikes which the others have taken is sticky and may be realized beyond the monsoon weak season is done. So the realization might be a couple of months down the line, but at least the direction wise, all the players seems to be falling in place to recover the rubber cost. So in that context, the bottoming out of margins will be there in June. So that's a relief for the tire stocks. So there our only preference is for Balkrishna, which is more of an international play and domestic tractor market recovery for the market share gain for them. Within the entire comp space, definitely the value per vehicle addition companies are the ones which are going to be at a relatively advantage, which I think along with the strong growth in those sub-segments, if they are driving the value per vehicle, they are the ones which will be preferred. Otherwise, if you look at, you are right, in the broader auto space, in the last 1 or 3 months, if you look at, the performance has been challenging on volume, even though in terms of margin performance, they will still be one of the high growth segments within the Nifty 50 or Nifty 100 to that extent. But sustaining, looking at the current valuations for the overall auto space, where it is trading more closer to a +1 standard deviation, the risk reward for broader auto, Nifty auto seems very limited. Choose on the component. Our preference is more for endurance, which is a proxy for two-wheelers, and for Bharat Forge, which is a proxy for CV players.
All right, so staying with the auto space then, we had the views coming in the auto space and the auto ancillary space, but you have Bajaj Auto that's all set to report its Q1 earnings. Srishti is here to tell us exactly what are we expecting when it comes to Bajaj Auto this time around. Srishti?
From Bajaj Auto, we are indeed expecting a good set of numbers because there has been a 7% volume growth jump on a YOY basis in Q1 of FY25. And apart from that, because of the higher average selling prices as well, that's expected to support the margins of the company. But overall, the product mix has seen an improvement because the 100cc bike segment contribution has been on the lower side. Apart from that, the two-wheeler as a whole, and especially the domestic markets, were supportive enough, and all these could factor in on the numbers of the company. When we talk about the revenue, there we are expecting a 2% jump sequentially. 11,724 crores is the expectation. Although EBITDA is expected to be just flat on a sequential basis, but there could be a jump of 19% on a YOY basis, and 2,331 crores is what we are expecting. Margins once again expected to be near that 20% mark. And lastly, from the profit figure, our expectation is of 1,928 crores. So a good set of numbers expected, but apart from that, the key to watch actually will be the management commentary and the booking number for the CNG bike that the company did launch recently. If they share the number, that will be very interesting to watch out for, because there has been a lot of excitement, but how it is looking into the number side, what sort of a booking the company is getting, we will be watching out for that. Apart from that, the company is on the expansion spree for their EV dealerships. What's the update there? And overall demand, how do they look at going forward? We will be watching out for all of those. So good set from Bajaj Auto expected, but the key to watch will be the management commentary.
All right, Naresh, let's get some closing ideas from you. Let's understand that based on the fact that, tonight is going to be a big night, at least for US markets, given what's happened, unfortunately, on the US political front. Looks like Dow is in for a good start. Should one go home with long trades and come back and sell them higher tomorrow?
So continue to hold on to the long trades. That's the only way one can ride momentum. So for now, the long remains on the Nifty as well as the Bank Nifty, and expecting the momentum to continue.
Okay. Pramod, at the current juncture, which are some of the names where you think that one should not be tempted by the recent price appreciation? You should simply sit on them because the best is yet to come, which is that in next 1 year, 2 years, 30-40% gains should come in.
Sorry, if I understood right, not to sell looking at the price?
Today, everybody has a reason why you should sell. Not selling, I think I've realized in a bull market, is the most difficult thing to learn.
That's a tricky question, Nikunj. So I didn't prepare for that. Let me put it, maybe I have to come back to you on that. Frankly, I haven't thought about what to do on that. But if you look at broadly in terms of investment ideas, where we would still prefer is where the cycles are turning around. And if it is the initial leg of the cycle, we wouldn't like to guess an hazard, saying that how long the cycle will prolong, and hence hold on to them. So to give you a couple of names, I would say we have been turning positive on some of the bulk chemicals names, which I think is basically the spikes has been at least around 20-30% from the bottom levels, but we still feel this trajectory has turned around. Similarly, there are a couple of export-led companies or CV cycle-related companies, like including Balkrishna Ashok, which we feel is cycle is turning around, but just not look at the stock prices and try to look at them on a more constructive 2-3 years phase. Similarly, in case of pharma, we have been consistently upgrading in last couple of months. Even this month, we have made use of the correction in IPCA to upgrade it. So those are the names which we would look at to play the turnaround in cycles to remain with them through the up cycle than looking at the recent spikes in the stock prices.
Kunal, 2.5 minutes to go. Are we looking at 25,000 before election, before budget?
Yeah, I think closer to 25,000, 24,800, 850, I would believe.
And what are the chances that we could be in for a very volatile kind of a budget?
My expectation actually, Nikunj, is that the Bank Nifty should make a good comeback.
It is not making a comeback.
No, I'm saying pre-elections, pre-budget, I think Bank Nifty should have a swing of more than 1,000-1,500 points.
So for a trader who knows that this time budget is going to be a budget which will have some ammunition for the market. Right, wrong, we debate some other time. But there is some price swing coming on the budget day because this is the large local swing event, right?
Correct.
What should be the positioning? Stay in cash, buy options, or go with a loaded gun, which is that, go all guns blazing?
Yeah, I think hold on to the stocks particularly. Stay on the options front on the call side for Nifty and Bank Nifty. In fact, till last couple of days, we were more on the underperforming side for the Bank Nifty. But I think after today's move and especially the stability HDFC Bank has given back again at the 16, 20, 30 mark, I would probably believe that Bank Nifty could be another candidate of a potential short covering. So that 1,500 point, 1,000 odd point underperformance for Bank Nifty, that could get covered up potentially over the next couple of days. So I think that would be an index to watch out for.
All right, so Nifty Bank is the index to watch out for, is what Kunal believes just ahead of the budget. Hopefully, it will start seeing an up move. On that note, thank you so much, Kunal, as well as Naresh for joining us on the show, as well as Pramod for joining us on the show and giving us a take on the sectors and also the stocks that you think there is some scope of an upside remaining. But let's take a look at the market.
If you like this video, then like, share and subscribe to ET Now.